And you really do see that pricing. Like Garfield said it yesterday, this is not so much doubting Jay Powell, but straight up telling him that he's wrong about the direction of the economy.
Yes. Yeah, certainly the market's very persistent on this one. It's been fighting the Fed all year, and it's even more convinced now that it's right, it appears. It said there's a small probability, about 14%, that there'll be a June rate cut. By July, at one point yesterday, a 25 basis point rate cut was fully priced in. It ended the day about 60%, so that's still a high probability. And if you look towards the end of the year, the market is priced in 90 basis points of rate cuts. So at the end of the day, the market's saying, yes, I know, Jerome Powell, you're saying we're not going anywhere in terms of rate cuts. The market's saying, I completely disagree with you. And one of them is because of this banking crisis. They'll certainly be looking at next week's lending survey. And if they see tightness in the lending survey, that's got them worried that the economy will go into contraction. Now, of course, the question is from the Fed, they'll say, look, there could be a recession. They have hinted at a potential mild recession. But the Fed, of course, has said that we're more concerned about inflation. And a recession doesn't necessarily mean inflation will come down. Obviously, there's a thing called stagflation. So, but the market's going, we don't care. You're going to cut if there's a recession. So they're both, the Fed and the market are at loggerheads. And if you remember back to just earlier this year, they were at loggerheads over what the terminal rate would be, 5.1 or not. And the Fed obviously has won that battle. Whether it wins the next battle, obviously will be another thing.
We're talking about the jobs report with Kathleen just earlier. What data points should bond markets be watching?
Yeah, I think the key thing here is obviously the overall numbers are always key, but also the wage growth. If wage growth remains high, then it's supposed to come about 4.2%. If it remains high, it's very tough to warrant that inflation is going to come down to 2%. You need wage growth to come down. So that's really a key number. But again, the headline number will always be a factor as well. But as I said, as Kathleen's indicated, if it comes in line with estimates for about 180 or just over 180, they're still very solid. So at the moment, if the data does match forecasts, the Fed can say, look, we still have a tight labour market overall, and that doesn't warrant rate cutting. Of course, the market's going, well, with this banking stress, that may warrant rate cutting. So the market's certainly looking for the data to deteriorate very quickly for the Fed to spur rate cuts.